Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday. Happy Friday, everyone, and it is September 11th. Wish all the families that were affected 19 years ago all the very best. I hope they were able to find some peace and love and some uh, rest after such an anguish. I think most of us still remember to this day like it was yesterday, and hopefully we don't forget. So to move onwards and forward, let's jump over to the economic report. We do got consumer price index to begin the day off, and this is inflation data on the consumer level. This is one of the two indexes that we look at, this and the PCE, personal consumption expenditure, and which the personal consumption expenditure is more of what the Fed will look at. They look at, of course, the core, which is when you strip out the food and energy. Those are two variables they can't control, so it kind of gives you really what the root word says, the core. So let's start. Now we have consumer price index, or CPI, and month over month in July it jumped up 0.6%. In forecast for month over month to August, it was supposed to be zero point 0.3, and it's slightly higher at 0.4%. Now, like we said before, when you strip out food and energy, you get the core, because this is kind of really the root what we're looking for. We had a 0.6% increase back in July, month over month, and forecasts were 0.2%, and it came in just like the headline at 0.4%. So that brings the year over year really from 1.6 to 1.7%. So still in manageable terms right now because it's below 2%. But of course, we want to watch this pace to see if it continues at a rapid pace or if it plateaus at all. So again, this is okay right now, but again, this is something they will watch to make sure that it doesn't go out of control. Let's jump ahead to the headline news. Stocks are up a little bit, but it is kind of light trading. It's not like really taking off dramatically. Investors are still a little disappointed that a bill has not been passed from Congress for stimulus. Republicans introduced the bill. Of course, we were expected that to not pass, because Democrats said it doesn't meet their 2.2 trillion. This was a lot lighter at 500 billion. So in any case, they're growing pessimistic that a bill won't be passed until after the elections. So time will tell, I guess. Let's jump ahead here to the headline news. I'm sorry, to the mortgage-backed securities and see what mortgage rates are doing today. Right now, we're up 11 basis points. So even though you see this lower than the yesterday's, and we're up, the reason being is that we had a bond rollover. So what happens is on a bond rollover, we kind of have a reset button basically on the bond market. So if you are in the market, let's say closing on a property on a refinance or a purchase, you'll see like usually it's in increments of 30-day locks. That's because when we lock that loan, close it, we sell it off on these get sold off on Wall Street. These get packaged up in bundles of mortgage-backed securities, and this is what drives interest rates. So on this set, it didn't affect pricing, even though it did move lower on the chart. It didn't affect our pricing. It just got basically a reset button. But right now for the day, we are up about 11 basis points. So it kind of brought us right back down to the 50-day moving average, and now we're challenging the 25-day moving average. Now yesterday, however, we did show some improvement. We were down when we did this report about 9 basis points, and I'm closing up about, I think it was like 5 or 8 basis points. So with that coupled with today's gains, I would say that you should see some improvement in our mortgage-backed security, in our pricing for interest rates, mortgage rates today. So that's good news. Now, hold on. One thing to keep in mind is, I don't know if I had said this in a previous report, that we had talked about before. FHFA had posed a uh, tax, or so to speak, a half a point tax on conventional loans. So any Fannie or Freddie Mac loan back in September, or supposed to have been effective September, which were stated last month. So immediately after they made that announcement, all the lenders put that into it, that were going to affect only the Fannie Mae, Freddie Mac refinance, not purchases or FHA or VA or anything else, but affect those refinance. They're going to put a half a point. Basically, it's a tax. Is what it is. They call it G fee. Implement. Now, because they had such a big backlash, they did postpone it for December. But because of the time frames to get a loan locked, closed, and then packaged and sell to to a Fannie or Freddie Mac, it's going to take about that time. So you're going to see next week a lot of lenders start implementing that half a point fee to their conventional refinances. So I've seen some lenders announce on Monday, and I've seen some announce later in the week, like Tuesday. So if you are looking to refinance, and just be aware that half a point, it's not to the rate, but to the cost, that could be a factor of about a quarter point to 3/8% in the rate. So that's how much of a factor that half a point will make in terms of pricing in conventional financing. So I don't know if the market will be dipping that much more to be able to offset that. So just be aware of that if you are in the market, have not locked in, may want to lock in this weekend ahead of that, so that way you're not getting hit with that fee. Let's take a look here at yields. Yields are down a bit, as you can see here. We broke below that level. We had that. We were testing way above it, pulled back. Now we're testing the 25-day moving average. So right now we are about 0.67 for the day. All right, so that's the wrap. Mortgage-backed securities. I say mortgage rates show a little bit of improvement, which is a good sign. If you guys are in the market to buy or refinance and looking for more information about the process or mortgage rates or mortgage programs, I will leave a link at the end of this video, so stay tuned. And also I'll put it in the description below. So go ahead and click on it. You can get more information on different programs out there, different information you might be looking either direction. I am a loan officer. The company I work with is a national lender. We do lend in 48 states. So if you're out of state, we could certainly help you out in that category as well. Please feel free to reach me through that website, and we can certainly talk a little bit about how we can help you. Whether if you're looking to refinance or looking at some solutions, looking ahead, we can use a mortgage as a conduit for different solutions. Also purchases, if you're looking for the pre-approval and get to purchase and everything, we can certainly help you in that category as well. So again, just click on that link, reach me through the website, and we can certainly talk about how we can assist you. You guys have a great rest of your day. Thanks so much for watching. We'll see you on Monday. Bye-bye.